Hello, everyone, and welcome to Women Employed's webinar on the Public Service Loan Forgiveness Program. We really appreciate your time today. So we have a lot of information to share with you today, so we're going to try to get started. As you probably realized when you signed up, the webinar goes till 1:30. The last half an hour will probably be mostly questions, but I encourage you to stay on if you would like, because as you will see, this program is actually pretty complicated, which is why we're doing this webinar today instead of just kind of telling you about it. My name is Corinne Kodama, and I'm a policy analyst here at Women Employed. Just a couple of quick housekeeping things. Your video is turned off and you will be muted for the duration of the event. If you have questions during the presentation, please type them into the chat box, and we will answer them if we can during the moment, or if they're more complicated or longer questions, we will save them till the end where we can have a discussion. So we will be monitoring the chat as it goes along. This event is being recorded, so we will share the link for the event afterwards for all of you who attended or signed up. Also, it is being streamed live on Facebook, I believe, so it is also being shared there. Someone says they can't hear something. Also, could I have the next slide? Thank you. So before we introduce our panelists and get into the event, we wanted to talk about why Women Employed is doing this. So reducing debt is one of the keys to building wealth, which is essential for women's economic empowerment and financial security, which is really a key pillar of the work that Women Employed does. So what you might not know is that women hold 2/3 of all student debt, totaling at least $1.5 trillion. Black women in particular hold more student debt than any other group, with an average of $38,000 in federal loans 1 year after completing their bachelor's degree. And we know that that tends to increase over time with interest and all. Next slide, please. Student loan debt has a significant impact on wealth building. It keeps people from being able to save for a house, retirement, future education, establish credit, and other life goals that provide economic security. Illinois has is the state with the 7th highest average student loan debt per borrow, with a little over $37,000, with a total outstanding debt of over $61 billion. Recently, Women Employed did an exercise related to what an activity the Debt Collective were doing called Take Your Debt to Work, and to find out, to kind of destigmatize having student loan debt, and to talking to your colleagues and friends and employers about how much debt we collectively hold. We polled our staff of 22 people. We're not that big of an organization. And we found within our staff, we had a total of $1.2 million in student loan debt, showing the scope of this challenge. Also, many of the federal student loan systems that we have bureaucratic and logistical challenges that are confusing at best and misleading at worst. And once a borrower has challenges with repayment, it's often difficult to get back on track, which is why we are involved in this issue. Next slide. So these are a couple of ways that Women Employed has been involved in the student debt issue. So we have, for many years, advocated for legislation to protect student loan borrowers, including the Illinois Student Borrower Protection Bill of Rights, which was passed in 2017. And we currently participate in the National Cancel Student Debt Table Coalition that strategizes and takes action on federal loan issues. And that is why we are pleased today to have the opportunity to share with you information about the Public Service Loan Forgiveness Program, a federal program that has been around for a while, but has had a number of challenges. And there has been some recent changes in the program that make it easier to qualify, which is why we're doing this webinar. So I'd like to introduce our presenters from the Illinois Student Assistance Commission. Illinois, also called ISAC. So ISAC's mission is to provide Illinois students with information and assistance to help make education beyond high school accessible and affordable. ISAC operates several key Illinois programs of higher education and tuition assistance, of which the largest and most well-known is the Monetary Award Program. So our presenters today are Megan Crum and Anna Moya. So they are both professional development specialists at ISAC. Megan is a first-generation college student and currently holds a Bachelor of Arts in Psychology from Aurora University and a Master of Science in Education and Higher Education and Student Affairs from Northern Illinois University. During her time at Aurora, she worked at the Office of Admissions and found her passion for working in higher education. Before joining the professional development staff, Megan served as an ISAC core member in the Waubonsee Community College District. She serves as a co-chair for the Illinois Association for College Admission Counseling's Professional Connections Committee and is a member of the Illinois College Fair Committee. In her spare time, Megan enjoys reading, exploring coffee shops, and spending time with her cat, Finland. Anna Moya is a first-generation college student as well and currently holds a Bachelor of Arts in Sociology and Criminology from Dominican University. She joined ISAC as an ISAC core member for the Triton Community College District, where she found her passion for working with first-generation college students and Spanish-speaking parents. Before joining the professional development staff, she served as regional coordinator for the South and West suburbs. She currently resides in Elmwood Park and enjoys the short commute to Chicago for the local coffee shops. So without further ado, we'll hand it over to Anna and Megan.
Thank you, Corrine. And we're going to go ahead and get started with the presentation for today. So thank you everyone for joining us. My name is Anna Moya and I'm here with Megan Crum, and we're going to get started with the overview of public service loan forgiveness program.
So while Anna gets the presentation pulled up here, we're going to cover a lot of different topics today in our hour that we have. And so we want to make sure that we talk about how the program currently stands, and then as well as what the new temporary changes entail as well. And so Anna, if you want to have the display settings changed, I see your presenter view. But again, my name is Megan Crum. I am a colleague of Anna's as well with the Illinois Student Assistance Commission, and we are so excited for Women Employed to have us today and to talk about the Pslf program, or the Public Service Loan Forgiveness Program. So let's go ahead on to the next slide and talk about what are we talking about today, essentially. And so we're going to talk about how the program stands currently. So traditional Pslf, and we're going to refer to it as traditional Pslf or traditional public service loan forgiveness. Then we're going to talk about the Pslf limited waiver that's currently in effect at the moment. And then Anna, I'm going to pass it off to Anna and talk about the waiver steps that you all potentially will need to take in order to access this information. And then Anna's going to wrap us up with some next steps and resources for all of you. So let's talk about traditional public service loan forgiveness, or Pslf. I'm going to refer to it as Pslf just because in financial aid, there are a lot of acronyms, if you haven't learned that or will learn. And the federal government is one of those people that uses it as well. And so have lots of acronyms. And so we are going to refer to it as Pslf, but know that, that Pslf stands for the Public Service Loan Forgiveness Program. So this is just some background information for all of you about the program itself. And what it does is that it forgives the remaining balance of your direct loans. So you as a borrower, so we're going to refer to you as a borrower. I'm a federal student loan borrower. I'm one of these individuals that falls within the direct loan program. And what it does for this program is that it forgives the remaining balance after a borrower has made 120 qualifying monthly payments under a qualifying repayment plan while working full-time for a qualifying employer. And once this happens, once a borrower has achieved the 120 qualifying payments over 10 years, so 120 means 10, it converts to 10 years. That's the total length of time that needs to be completed for the program. Once that 10 years of repayment has been made, it only applies to October 1st of 2007. That is when the program began and has been enacted since. So let's dive a little bit deeper into what it means for how the current rules and regulations stand. So let's first talk about qualifying loans. That's probably going to be the biggest piece around, in addition to some of the other things that we will talk about today. So first would be what loans are eligible under Pslf. First, it would be both direct subsidized and unsubsidized loans. Additionally, direct plus loans, I apologize. And then direct consolidation loans. So these are all loans that are student held. In addition, though, these are all the ones that qualify for traditional Pslf. Now let's talk about which loans don't qualify. First, it would be direct parent plus loans do not qualify, but you're going to see some of those asterisks, and we're going to talk about those. Then it will be the Perkins loans, as well as federal family educational loans, or FFEL as they're known as, or FFELP, because the full name of the program is Federal Family Educational Loan Program. So sometimes you might hear us say that we will say FFELP as well with that P at the end. And then lastly, joint federal consolidation loans. But what you'll notice with those asterisks, though, is that those that are marked with the asterisks can become eligible for traditional Pslf if they are consolidated into the direct loan program. So specifically with direct parent plus loans, it's important to remember that they can become eligible once they are consolidated into other, if you are the parent that took it out, into your own federal student loans. Parent plus loans cannot be consolidated with other student held loans. So if you took out a parent plus loan on behalf of your student cannot combine their federal student loans with your parent plus loans. They can't be consolidated. But what will happen additionally, once consolidation takes place among these loan types, so whether it be a direct plus loan or through Perkins or FFEL, under traditional rules, consolidation actually will restart your payment count. So you may have already started making payments towards those ineligible loan types and have gotten so far. But once you choose to consolidate, the payment count does restart at 0, and you would still need to work for 10 more. You would need to make 10 more years of qualifying payments in order to qualify for Pslf. So next, we're going to talk about the qualifying employers and payments. So Anna, if we want to move on to the next slide. So with qualifying payments, it's important to remember that there are 120 payments that need to be made after October 1st for 2007 in order to qualify. So any payments that you've made prior to 2007, if you are a borrower, will not count. But it's also a nice thing to know that payments do not need to be consecutive. So we'll talk about a qualifying employer here in a little bit, but say you work for a qualifying employer and you made a qualifying payment when you worked for your qualifying employer. Great. Say you did that for a few years, but then say you left what would be considered a qualifying employer. From there, and say you're still making payments, but those payments do not count towards Pslf. But say you come back to working for a qualifying employer and you're still making payments. What happens is that you don't lose eligibility for those X number of payments you've already made. What happens is that your payments just pause there for a little bit, say, yep, this is the total amount that you have so far made towards the program for that total of 120. But you left a qualifying employer, so those don't count. But once you come back to a qualifying employer, it restarts. So it picks up where it left off, not restarting. It's like starting at 0. It doesn't do that. It picks up where you left off in the payment count. Now, qualifying payments must be made for the full amount due. It also must be made under a qualifying repayment plan. We'll talk about that. It also must be made within 15 days of the due date. Now, for payments that are made when you're not required to do so, so during periods of deferment, so that would be like in-school deferment or forbearance, or during periods of grace periods that all federal student loan borrowers have, those periods of repayment do not count towards Pslf. Now, one thing to note as well is that pause payments due to the COVID-19 federal emergency, so the COVID-19 forbearance that all federal student loans are currently in, is that they will count towards PSLF. So if you've met all other PSLF requirements, so meaning that you work for a qualifying employer and you would have normally made a payment during this time, what would happen is that payments, the paused payments right now due to COVID will count towards your overall total for PSLF as long as you worked for a qualifying employer during this time and would have made a payment. So meaning that you weren't meant to be in school deferment or in a different sort of forbearance or in a grace period. So we're going to move on now and talk about different, some additional things with payments and qualifying repayment plans. So with qualifying payments is that that you can make multiple partial payments. So I want to be clear about this, what this means. That say you have take whatever X number amount that you need to pay per month towards your federal student loans. What you can do is if you can actually make smaller, multiple partial payments that equal up to that total amount as one payment. Okay, so it helps you, if it needs to, you need to budget, whatever it may be, but you can make multiple partial payments within 1 month to help equal that total amount of your total balance due for that payment. Now, again, it has to be received within 15 days of your due date from that servicer to that servicer. But in addition, one new thing that's actually been added as part of the program and qualifying payments is lump sum payments. So lump sum payments count as multiple qualifying payments for up to 12 months, so it's either up to 12 months or through the next repayment plan recertification date, which all individuals on an income-driven repayment plan have, and we'll talk about that, or whichever is sooner. So it's either up to 12 months or the next recertification date. So let's put this into terms for you. So say, for example, you are a borrower who has completed the repayment plan certification process on February 1st of 2022, and your monthly payment is $100, and you decide to make a payment of $1,200 and on February 15th of 2021. What's going to happen is that that should say 2022, I apologize. So you decide to make a payment of $1,200 on February 15th, 2022. Your next recertification date from your income-driven repayment plan is not till February 1st of 2023. What's going to happen is that $1,200 payment would count as 12 separate payments because it's $100 per payment. So that's 12 months, it's $1,200. So Anna, she's over here answering questions in the chat. So if I know it gets a little confusing sometimes, but know that you can make lump sum payments that equal up to 12 months. So, or until that recertification date. So let's go ahead and move on and talk about our favorite thing, I think, during this process sometimes is repayment plans. So if you're not aware, federal student loans are currently still paused due to the extension of federal student loan payment pause until August 31st of 2022. But once everyone moves back into repayment, the Department of Education is actually really encouraging borrowers to move into an income-driven repayment plan. And a requirement of PSLF is to be on an income-driven repayment plan or an IDR. Again, another acronym for all of you to be aware of, but I will call it IDR, Anna may as well, but know that it means income-driven repayment. Now, this IDR is an umbrella term. It does a couple things. One, it encompasses all of the repayment plans available to a borrower that are eligible under PSLF. So, for example, there's pay, repay, income-based repayment, which is an IBR, again, another acronym, and then income retention payment. So all of these repayment plans that you see under an IDR are eligible to be used as a qualifying repayment plan towards PSLF. Now, as we mentioned that with a borrower who's on an IDR plan, they do have to certify their income and household size every year, and that's where that recertification comes in. For that previous slide that we saw, that depending when you recertify your income and household size may affect your lump sum payment amount or when you'll need to do it each year. Now, a standard repayment plan is considered a qualifying repayment plan, but it's not potentially the best one to be on because for PSLF, even though yes, it's considered a qualifying payment plan, the repayment plan for standard repayment plan, it is designed to have the loans paid off in 10 years. So if you're on a standard repayment plan for 10 years and you're pursuing Pslf and you need to make 10 years worth of qualifying payments, there's no loan to be forgiven after 10 years under a standard repayment plan. So if you are on a standard repayment plan or were on a standard repayment plan prior to the payment pause, you know, you should absolutely switch to an IDR as soon as possible. So that way there would be that loan amount forgiven once you've made 120 qualifying payments. So now we're going to dive a little bit, talk a little bit more about what it means for that recertification. And so if we're going to go ahead and move on, Anna, with the recertification, every borrower has to do this every year. And so this is recertifying their income and household size. Now it can be done sooner if there was a change in your income. So such as like due to the pandemic, many individuals had a loss of income. And so if a situation like that happens again, or a different situation potentially, absolutely reach out back to your servicer and ask to recertify sooner so that they can see what your current situation is. Now, an important note is that you actually can self-certify your income until July 31st of this year. From there, some other laws that were enacted to help borrowers import their tax information and their income from the IRS. But know that you can self-report your income for recertification until July 31st of this year. Now, we want to just highlight that for borrowers who are married, you will need to report income as follows. So depending on the repayment plan that you're on under an IDR, such as, you know, for pay, repay, or income-based or income contingent, if you file married filing jointly, the income is considered jointly, okay? But if you're on a certain repayment plan, so such as you see on your screen for revised pay as you earn, or which is the repay, your joint income is considered regardless if you file married filing jointly or separately. But if you do file married filing separately and you're on one of those other options of repayment plans under an IDR, only the individual's income is considered and not the spouse's. From here, let's talk about qualifying employment. So we're going to go through this, and there's absolutely lots of information on qualifying employment, but know that any government organization is considered a qualifying employer. So this happens at both the federal, not both, but many levels actually, both the federal, the state, local, and tribal levels of government. So if you work for your township's government, or Ann and I work for a state agency, we are considered a government organization, and we work for a qualifying employer. Now, in addition, 501c3 nonprofit organizations also count towards qualifying employers. But in addition, say your nonprofit organization is not considered a 501c3. In that case, as long as the nonprofit is considered public serving, such as public education, so working for one of the school districts here in the state, public health, public, library services, emergency management, military service, public safety, law enforcement, those qualifying employers do count towards Pslf. Now, in order to also meet with qualifying employment, it's that you must meet employer's definition of full-time or work at least 30 hours or more per week. But the other thing with qualifying employment is that, say you have multiple qualifying part-time jobs. So you have 2 part-time jobs that are both considered qualifying employers. As long as you work at them at the same time and they equal up to full-time employment, they can count as a qualifying employer that you work for and can count towards Pslf. So again, it's any government organization for qualifying employment. It's the 501c3 nonprofits. But in addition, if a nonprofit does not have that designation from the IRS of 501c3, if you work in public serving, that such as public education, public libraries, it can count towards Pslf as well. So we're going to move on now and this very quickly. This is just a nice little chart we put together at ISAC. So you can find this on our website at isac.org/PSLF, and to figure out if your employer qualifies. So again, if you're a government organization, yes, your employer automatically qualifies. If no, and from there, it says, okay, is your employer tax exempt under the 501c3 revenue code, the Internal Revenue Code? Yes, then your employer qualifies. If no, then what happens after that. So Anna, if we want to move on to the next slide, from here, know that if it's not a non-tax exempt organization under that revenue code, no, your employer does not qualify. It's if a nonprofit under that code, but if it is, it is a nonprofit, but does not have the code, but is it's going to ask, is your employer a partisan political or organization or labor union? Yes or no. If yes, your employer does not qualify. But if no, on the next slide, we're going to see it's going to bring out those public serving organizations that you could potentially work for that qualify. So again, emergency management, military service, public service, public safety, law enforcement, early childhood education, public service for the elderly, public health, public education. So then yes, if you work for one of those, then yes, your employer qualifies. But then if you do not, then no, your employer does not qualify. So again, you can find that graph on our website at isac.org/PSLF and just follow it along if you're trying to figure out if your organization qualifies. So once you have deemed that your employer qualifies, you will need to submit an employer certification form. And so this actually happens through when you apply for PSLF. And so this on your screen, you'll see a PDF copy of what the employment certification form looks like. You can manually complete this, but you can also complete this online through the PSLF help tool. You'll enter your employer name and address, the employment start date and end date if an end date is applicable. So for example, if you need to report an employment certification form for each qualifying employer. So if you're no longer working for a previous employer, you need to include both the start and an end date. But you do have the option of saying, yes, this is my current employer. So that way there's no end date for that current employer for a qualifying employer. You'll also need to report your federal employer identification number, or your FEIN, that is found on your W-2s. Okay, so, or if you for some reason don't have a W-2, you can ask your organization and they will have it. But yes, you will need to report your federal employer identification number. Your employment status, so if you work full-time versus part-time, the number of hours you work per week, and the type of qualifying employment. So again, going through the graph of who is your employer. So then we're going to move on next to talking about how you submit this information. So once you have confirmed, you've filled out the ECF or the employment certification form, you need to submit that to your HR department, and they will need to verify that you have submitted the information, and that is the period of time that you worked for that organization. The employer will need to certify that the employment, and then send it back to you, because you need to submit the employment certification form with the PSLF application. From there, you would submit all of the documentation together to the Department of Education. From there, the Department of Education will work with the PSLF servicer to confirm the qualifying employment. And from there, the PSLF servicer will notify you of how many qualifying payments have been made towards PSLF. So now that we've talked about traditional PSLF, we're going to move on and get into the new stuff that is happening. But we're going to talk about one scenario first. So we have Michelle. Michelle is a therapist who graduated from college in 2001 and financed her education through loans from the Psl program. And so after graduating, Michelle worked for a nonprofit organization, and that is not a 501c3, but she did make on-time payments under an IDR plan. In 2008, Michelle learned about the PSLF program and steps she would need to take to qualify. She completed all necessary steps that same year, consolidated her loans, made an on-time payments under an IDR plan, and submitted documentation to confirm her employer provided services to the public. So if we look at Michelle, and if she qualifies for traditional PSLF on the next slide, from 2008 to 2018, Michelle had an eligible employer and made 120 payments on a qualifying repayment plan. therefore she can receive loan forgiveness. Now, again, remember, it's only the payments made after October 1st of 2007 would be eligible. However, under traditional PSLF, payments made prior to consolidation do not count because it starts over at 0. So when Michelle consolidated in 2008, her payment count restarted at 0. So those previous payments she made does not qualify, but anything after consolidation would and did qualify. So let's talk about the brand new temporary changes. So this is the more, I think, exciting information, because we've talked about how the program currently stands. So let's talk about these temporary changes that are happening. So if we can move on to the next slide, Anna, we're going to go over the overview of the limited waiver. So now until October 31st of 2022, Anna and I are going to say that date, I think, 100 times more today in the next, however long we have with you. And so now through October 31st of 2022, borrowers may receive credit for past payments of repayment on loans that would otherwise not qualify for PSLF. So we're going to dive a little bit deeper, but this means that for those of you who had ineligible loan types, okay, and made a payment on those had an ineligible loan type, you can potentially receive prior payment counted towards PSLF through these limited waiver period. Now, it's important to make note that Parent Plus loans are not eligible under the limited waiver. Again, they still need to be consolidated in order to qualify for PSLF. The parent themselves need to consolidate them, but they do not qualify for the limited waiver period right now. Periods of deferment and forbearance, grace period, or periods of default continue to not qualify. But again, making that note of if you've made a payment during the payment pause, or if you haven't, like many individuals haven't, they will still count towards PSLF as long as you worked for a qualifying employer. So let's talk about now qualifying payments that count during the limited waiver period. So these new temporary changes allow for past periods of repayment to count regardless. Okay, so regardless of these things, loan program, that's the big thing. So when we saw at the very first slide back for qualifying loans is that we talked about ineligible loan types. Those ineligible loan types, such as FFEL loans or Perkins loans, can now become eligible through this limited waiver. So as long as they're consolidated into the direct loan program. So that didn't change. That borrowers who have FFEL or Perkins loans still must consolidate their loans into the direct loan program, and you must do that by October 31st of this year. Again, past payments and repayment will count regardless of the loan program or your repayment plan. So if you were not on an IDR plan or an income-driven payment plan while you made payments, that no longer applies now. So any repayment plan counts. So if you were on standard repayment, if you were on extended repayment, graduated repayment, that will qualify now. Additionally, whether the payment was made in full or on time will also qualify towards the 120 payments. So this is a big change that is happening. So it's important that Anna's going to walk through these steps, but these things now qualify towards that 120 total. Now, again, these changes only qualify to direct loan borrowers. And so if you have FFEL or Perkins loans, you must consolidate. It's not, it's not like, you potentially have to. No, it's a must. You must consolidate if you have FFEL or Perkins loans or some older federal student loans into the direct loan program by October 31st. Okay, Anna. So let's kind of look through what are the traditional rules, but then what's changed because of the limited waiver. So on the left side of your screen, you'll see in the blue what traditional PSLF stands. So you can only receive credit on direct loans. You have to repay under the standard repayment plan or an income-driven repayment plan. You have to make on-time payments. You must be employed full-time for a qualifying employer. And you can only receive forgiveness if you are currently working for a qualifying employer. Okay, at the time of application and forgiveness. And then additionally with traditional PSLF, if a borrower received teacher loan forgiveness, that period of service that you confirmed that led to eligibility for teacher loan forgiveness cannot also be counted towards PSLF. But let's look at these waiver changes. So borrowers who can receive credit for past periods of repayment made on either direct loans, FFEL loans, or Perkins loans, or some of those older federal student loans can now count. So regardless of repayment plan, so if you were on any type of repayment plan, whether you're on IDR or not, periods of repayment on loans before consolidation, that's a big key when we see some scenarios a little bit later. Once, wherever you consolidated, whether it be now because of the limited waiver or prior, to go into make sure you meet normal traditional PSLF rules. Periods of payment prior to consolidation will also now count. Periods of repayment where payments were less or for late than the amount will now count. And you can receive forgiveness even if you're not currently employed. So say you've retired and still are paying on your federal student loans, that will now count as well towards the PSLF limited waiver. Or if you're no longer working for a qualified employer, but you're still paying on your loans, but you worked for a qualifying employer or multiple qualifying employer and made 10 years of qualifying payments. Okay. So the key is that you still have to be paying on your federal student loans. Yes, you don't have to be working for a qualifying employer, meaning you have retired, or you've, left a qualifying employer, but you have made 10 years worth of payments. And then lastly, if a borrower received teacher loan forgiveness for that period of service you confirmed for teacher loan forgiveness, will now count towards PSLF. Okay, so again, these changes are only until October 31st. Okay, so but yes, these are only till October 31st, but some changes that affect a lot of borrowers and many of you potentially. Okay, Anna. So let's talk about what didn't change. So that's the other key piece, was that you still have to have made 120 payments. Okay, and still 10 years worth of payments. All right. So additionally, you can only receive credit for periods of repayment after October 1st of 2007, because this is when the program started. So any point before that will not count, but any payment made after October 1st, 2007 will count. If you worked for a qualifying employer, right? Now, this is the other piece. You still had to have worked for a qualifying employer. Even though the waiver changes allow for any periods of past periods of repayment to count, whether you're on a correct repayment plan, if it was in full or not, you still have to work for a qualifying employer. So a government organization, a 501c3, a nonprofit, or that provides qualifying public service. You still have to work full-time or work multiple qualifying part-time jobs at the same time that equal to full-time employment. You have to have direct loans currently, or you consolidate into the direct loan program. And then lastly, you have to certify qualifying employment for periods of time in which you want credit towards PSLF. So each and every one of you, if you're like, yes, I now can qualify for PSLF because of these limited waiver changes, you will be submitting an employment certification form for each past qualifying employer. Okay, Anna. So just some touch points for all of you of those, if you are a previous active duty service member, or if you know someone who's an active duty service member, that with these new limited waiver changes, so months spent on active duty will now count. Previously they didn't, but they will now count towards PSLF under the limited waiver. So even if the service members' loans were in deferment or forbearance because they were on active duty, those will now count as well. But federal student aid is developing and implementing a process for these borrowers specific for who were on active duty to reconcile this information that, that period of repayment on deferment or forbearance were not counted and now will. Federal Student Aid, which is an office under the Department of Education, will notify borrowers on that process and how to make sure that they get those steps that they need to take to have those, periods of repayment count now. Okay, Anna, I think we're almost get to you. Okay, last thing before I pass it off to Anna here is that let's talk about refunds and exceptions. Some of you this may apply to, some of it may not, but we still wanted to touch on it. So individuals who have made more than 120 payments due to now the changes for PSLF through the limited waiver, some of you your payment count may go over the 120. You may receive a refund for the excess over 120. Okay, so the PSLF servicer and the Department of Education will work with you to, if you will qualify for that refund, if you do. Now, if you have already paid off your loans or have met traditional rules for PSLF and your loans have been forgiven, you cannot retroactively go back and have the limited waiver applied. Okay. So because there's nothing to forgive anymore, because you've already received forgiveness or paid them off, you can't have it retroactively be done. But is if you are still paying on your federal student loan on your loans, you could potentially receive a refund, but you could now receive forgiveness for your loan amount through the limited waiver. Okay, I'm going to now pass it off to Anna to talk you through how to get through this process. And I see we have lots of questions in the chat coming in. So Anna, I will pass it off to you now.
Thank you, Megan. So we're going to get started with the PSLF waiver steps. This is going to answer some of the questions that you guys have already submitted on the chat. So just as a reminder, one of the questions we keep getting is, yes, the recording is going to be available for you all after this, but we're going to get into the PSLF waiver steps. Now, one of the questions just before you, to prevent from you guys asking this question is if the waiver period is a different application from the regular PSLF application, and the answer is no. This is just, the waiver is just a period in time where there are some flexibilities as to what counts as a for a qualifying payment. And also if you do consolidate so that your payments don't restart back at zero during this waiver period. So that's what it means. But pretty much there's some additional steps before you get into the actual application itself. But once you get into the application, whether you have applied in the past for PSLF or traditional PSLF, if you're applying for PSLF during this waiver period, it's going to be the same form. So there's only one form for PSLF in general. Again, the waiver is just a period in time where there are a little bit more flexibilities with it. So to get started with the PSLF waiver steps, the first step is going to determine the type of loan that you have. So in order to determine the type of loan that you have, and you'll see why when we get to step 3, is to know if you're going to consolidate. So if you're going to need to consolidate your loans. So first step with determining the type of loan that you have is going to be for you to log into the studentaid.gov website. Once you're in the studentaid.gov website, you will, if you have never done so, you will need to create an FSID if you hadn't done so in the past. So this is going to be a federal student aid ID. If you've in the past have had created an FSID, then you would simply just need to log in. The FSID is going to be one of the most helpful logins that you'll have created because you'll use it for several websites for federal student aid, not just to help you determine the type of loan that you have. Once you logged into the studentaid.gov website with your FSA ID, you want to navigate to the aid summary page. You'll scroll all the way to the bottom where it'll give you a breakdown of your loan. When it's giving you the breakdown of your loan, you want to look for some keywords. The keywords that you want to look for to help you determine what type of loan that you have is the words direct, FEL, or Perkins. So if you have a direct loan, it would mean that you have a loan with the word as it is direct within the name of your loan. If you have a FEL loan, which is a Federal Family Education Loan Program loan, it'll start with the word FEL or FFEL. And then lastly, a Perkins loan. So if it has Perkins anywhere in the loan name, it'll be a Perkins loan. So keep in mind, especially the FEL and the Perkins loans, because it'll be a really big factor into knowing if you need to consolidate your loans. Step 2 is going to be for you to complete step 1 in the PSLF help tool. So the PSLF help tool is going to be the tool that's going to help you whether you are trying to take advantage of this waiver period or whether you just want to complete the PSLF form. This is going to be the one form that's going to be the same for all borrowers who are seeking more information or to know if they would qualify for PSLF, for forgiveness under PSLF. So complete step 1 under the PSLF help tool, which is going to be your employer's information. On here, if you have never accessed this site before, this tool before, it'll ask you to add your employer's information, and I'll go into what employer information you're going to need. But if you have had access to it before, it'll ask you if you're still with that employer. So it'll bring up information about past employers. keep in mind that this is not something that, because you created an FSA ID, this is not something that automatically they have your information for. This is something that you physically have to put in that information. It's not like the Department of Education has information about your employer unless you manually enter that information and submitted the information to the PSLF help tool. So just keep that in mind. If you are someone who has never accessed this form, you have never submitted your employer certification form, then that information would not be on here. So if you're someone who's logging in and you start to freak out because you don't see your employer's information, it could just be that you did not certify your employer in the past and had not accessed this application. Now, with employer information that the PSLF help tool will ask for is going to be the biggest and main thing is going to be for the federal employer identification number, or EIN. This is typically found on a W-2. Earlier, you guys were asking about how do I know if my employer is a qualifying employer? And some of you guys were asking about the position that you have. The biggest thing with knowing if you have a qualifying employer, it's not so much your employment or your title of employment, it's your employer itself. So like here, I'll give myself as an example. I work for the Illinois Student Assistance Commission. This is a state agency. I am a professional development specialist. My title does not matter for me to identify if I have a qualifying employer. What matters is that I work for the Illinois Student Assistance Commission. They would be my employer. It's a state agency. So on my W-2, I would pull that EIN and use it to complete the PSLF help tool. In addition to having that EIN, it'll ask me to enter my start and end date, just in case I am entering information on past employers. But if it's still my current employer and you're certifying on your current employer, then you would just select the button that says, this is my current employer. And they'll know that you don't have to enter that end date. Now, again, for those of you guys who might have accessed the tool in the past, it'll proceed to ask you if you still work for the following organization that you are going to file for, and it'll have your employer's information. We blurred it out because these screenshots were actually from one of our colleagues going through the steps themselves. So we blurred out the information just so that they could have their information secure, but just know that where that arrow is pointing, if you've accessed it before, it'll let you know or ask you if you're still working for that employer. Now, another thing is that if you are someone who, as you're going through the PSLF help tool, if you do not find your employer's information, or it's kind of like not pulling up anything on the list, just know that although the PSLF help tool has a ton of qualifying employers already on file, there's a lot of qualifying employers that they do not have on file. Be sure that if that information is not being pulled up for you, if you are typing in your employer's EIN and it's not pulling up anything for you, still continue to type up your employer's EINs, just because this way the PSLF help tool, they'll look into it to know if they are a qualifying employer, and they'll make that decision. And they'll then, if it is a qualifying employer, they can add it to all of their data for future employees. So even if you do not see it at the beginning, and like I said, they do have a ton of qualifying employers on file, but as long as you enter the information, even if you're like, you know what, they meet all of the qualifications, it's just not on file, continue to enter the information, and the PSLF, what's called the PSLF servicer, they'll follow up with you and let you know if it's a qualifying employer or not. Now, the third step with the PSLF waiver period, and this is going to be the biggest thing, is that in order to qualify for the PSLF waiver, you as a borrower, if you have a qualifying employer, you also have to have an eligible loan. Perkins and FFEL loans are not eligible for PSLF alone. You have to go through that additional step of consolidating your loans. And in order to qualify for the PSLF waiver period, you have to consolidate your loans by October 31st, 2022. So this October 31st. In order to consolidate your loans, you have to go into the studentaid.gov/consolidation. And then you log in again using your FSA ID. So you must complete this by October 31st, 2022. I saw earlier on the chat, someone had asked, oh, I thought once you consolidated your loans that the repayment count wouldn't start at 0 again. Again, this is why we really want you guys to take advantage of the waiver period, because that is only the case for the waiver period. During traditional PSLF, if you have a Psl or Perkins loans, yes, they can become eligible for PSLF, but once you consolidate during traditional PSLF, your payment counts start back up at 0, even if you had qualifying payments. But during the waiver period, if you consolidate your Psl or Perkins loans, so do so by October 31st, 2022, those loans, your repayment count before you consolidate it, they are taken into consideration moving forward for you to qualify for PSLF. So this step is really, really important that you complete it by October 31st, because the consolidation process can take up to 30 days depending on who your loan servicer is. So you want to make sure that you are doing this as soon as possible. Now we're going to get into step 4 of knowing if you should be taking advantage of the waiver period, which is going to be the Psl form. Friendly reminder, the Psl form is going to be the same whether you're qualifying or applying for traditional PSLF or applying through the waiver period. There's just one form, it's just one program. So in step 4, you have to submit your PSLF form through the PSLF help tool by October 31st, 2022. And then these are going to be some of the steps that you're going to see within the PSLF help tool. The first one being employment history, which you would have already seen. It'll go through loan tips, application details, personal information, and then it has the review and save feature. Note that in order to submit your PSLF application, you have to recertify your qualifying employer every time you change employment. So if you have a qualifying employer now and you switch jobs, you have to complete all of these steps in the PSLF help tool every time you do have a new qualifying employer. Now with the PSL form, you guys already saw this. This is going to be the employment history. We went through this as part of step 2 for the PSLF waiver period. So you want to complete all of the information on your employment history. The second thing that you're going to see, the second step in the PSLF form is going to be for loan tips. This is going to include information on how the PSLF waiver affects certain types of loans, how to complete loan consolidation, which is going to be one of your best friends when you are thinking of consolidating your loans or if you need to consolidate your loans. And lastly, how to verify employment. Then as part of the PSLF form, we'll get into what is called the application details. This is what the form calls it. The application details is going to be what helps you determine if you have already made the qualifying payment. So it's asking you to certify whether you have made 120 qualifying payments already, or if you have not made your 120 qualifying payments. One of the questions we often get asked is, do we need to wait the full 10 years of qualifying employment and wait until we've made the 120 qualifying payments before we apply for PSLF? And the answer is no. You are able to track your progress through the PSLF help tool. You're able to already certify employment just in case you do if you do switch employers, you don't have to retroactively go back and certify employment for past employers if you have already done so. And the second nice thing is that you're able to track your payments, and it'll kind of give you a checkpoint or an idea of where you are in your payment count. So again, this will ask you to certify if you've made the 120 qualifying payments or if you have not. Whether you have or you haven't, or even if you have no idea how many qualifying payments you have made, you can select either or, because the PSLF servicer would eventually reach out to let you know how many qualifying payments you actually have. And then it'll also give you the option to opt into forbearance while the application for forgiveness is being reviewed. So after you submit, if you are one of those individuals who is submitting this application because you've completed your 10 years and you believe you've completed your 120 qualifying payments, you are able to get into forbearance or opt into forbearance and momentarily pause your payments. Just keep in mind that during forbearance, as you're self-selecting to opt into forbearance, interest is still going to accrue during this period for you. So you as the borrower, you're still in charge of that interest rate. Now, one of the questions Megan already touched on it, but it was also about periods of forbearance for COVID. This is going to be the only exception to qualify, to have your payments qualify while being in forbearance. So periods of forbearance due to COVID, those are still qualifying payments. But anything else outside of COVID, if you are during periods of deferment or forbearance outside of this period, those payments will not qualify as a qualifying payment, not even through the waiver period. So just keep that in mind. The next thing is going to be for personal information. This is where you'll just enter your basic personal information, your address, the city that you live in. You will notice, and don't freak out if some information appears on here, because the personal information is some of the information that gets transferred in from your FSA ID. And I didn't talk about it earlier, but once you get into the help tool, the Psl help tool, you are going to need your FSA ID to log into it as well. Then we'll go through the review and save. To review and save all of the information, you'll review your employment history information that you entered, the application types, so those you certifying whether you have made 120 qualifying payments or whether you have not made those 120 qualifying payments. You'll see all that information during the review and save portion of it. And also your personal information. Any edits that need to be made at this point, if you are on this page and you see that something needs to be edited, you can do it from this page. You don't have to go back to other sections in order to make the correction. And then just keep in mind, it'll give you the option to save your application, which is great, but just because you're saving it, it does not mean that you are submitting it. You have not completed the Psl form. This tool is really helpful in helping you complete the application itself and guiding you through how to complete the application. But just know that as of right now, there is no way of submitting this online. It has to be, there's additional steps as you download it and print it. So the next step after saving it is going to give you the option to download the Pslf application form. Once you completed the Pslf application form, you have to submit your employer certification form to the HR department to verify your employment. Keep in mind that they do have to provide a signature in order to certify your employment. It's usually through your HR department. At this time, digital signatures are not being accepted unless they're hand-drawn. Now, once your HR department certifies your employment, you have to submit the application. There's 3 ways to submit the application. The first one does not apply to all borrowers. It does not apply to most borrowers, I would say. The first one's going to be a secure upload. This is only going to be for borrowers whose student loan servicer is my Fed loans. If your student loan servicer is not Fed loans, then you would not have the option to do a secure upload. For all other borrowers who have other servicers, it's going to be the only option to submit the Pslf form with the signed certification form is going to be through mail or fax. Now we're just going to go over a brief summary of the limited waiver steps. This comes directly from from Federal Student Aid. And this is going to be just a wrap up of how they wrapped it up and summarize what the steps are in order to qualify for Pslf during the waiver period. And as you can see, this was during the Christmas time. Nothing has changed from this infographic. So step 1 is going to be for you to log into the studentaid.gov website and then navigate to the aid summary page to verify the type of student loans that you have. This step is really going to be important because you want to know if in future steps you're going to need to consolidate. Step 2 is going to be for you to complete step 1 in the Pslf help tool to verify that your employment is eligible for Pslf. And then step 3 is going to be that if you do have a qualifying employer, but you don't have qualifying loans, that you consolidate into the direct consolidation loans program. And this is going to be through studentaid.gov/consolidation. And just really important, this has to be done by October 31st, 2022. And then step 4 is once you've consolidated your loans, you want to make sure that you submit your Pslf form through the Pslf help tool by October 31st, 2022. Now we're going to go ahead and get into some scenarios to help us better understand the differences between traditional Pslf and what qualifies under the waiver period. So scenario number one, we're meeting Andy. Andy is a doctor who graduated from medical school in 2010 and financed his education through FFEL loans. After graduating, he worked for a nonprofit organization for the next 10 years, making minimum on-time payments under a qualifying repayment plan. In mid-2020, Andy applied for Pslf and was told that he did not qualify for the program because of the FFEL loans that he did not know were ineligible for Pslf. So remember, FFEL loans and Perkins loans do not qualify under traditional Pslf or even the waiver period. But while Andy completed 10 years of public service, his loans were not eligible for Pslf. Under traditional Pslf, if Andy were to consolidate his FFEL loans into a direct loan to become eligible for Pslf, he would need to remain in public service work for 10 more years, as his payment count would restart to 0. Now, again, with traditional Pslf, even if Andy had realized the issue sooner and consolidated his loans into a direct loan in 2015, he still would not be eligible for Pslf today, because his prior payment history from 2010 to 2015 would have been lost, and he would only be credited for payments from 2015 to present. This would be post-consolidation. With the Pslf waiver, the waiver would allow Andy to count all of his payments towards Pslf, including those that were under FFEL loans, as long as he consolidated his loans. Therefore, he would have 120 plus qualifying payments. Now, for our next scenario, we have Jane. Jane is a special education teacher who works at a public elementary school. Upon graduating from her master's program, she had $90,000 of total debt across various direct loans. Jane consolidated her loans and selected the extended repayment plan. Now, keep in mind when Megan went over what are qualifying repayment plans. Now, while Jane has the right type of employer, public school, and the right type of loan, direct loans, to qualify for Pslf, she does not have the right type of repayment plan. Her extended repayment plan is not an income-driven repayment plan. Thus, Jane is not currently eligible for Pslf. With the Pslf waiver, the waiver would allow Jane to get credit for all payments, even those on an ineligible type of repayment plan. Now we're gonna meet Zach. Zach has been working as a nurse for a public hospital since 2012 and took out student loans between 2007 and 2011. From 2012 to 2016, Zach made 48 payments on his loans before he realized he was paying on a FFEL loan and was ineligible for Pslf. In 2016, he consolidated all of his loans into one direct consolidated loans and completed the Pslf application. This means under traditional Pslf, his past 48 payment credits will be lost and will start back at 0. Since 2016, Zach has made 70 payments after consolidating. Now, with traditional Pslf, Zach made 70 qualifying payments towards his direct consolidation loan from January 2016 through October 2021. This means he still needs 50 more payments to reach the 120 payments required for forgiveness. With Pslf waiver, Zach can receive credit for the initial 48 payments that were lost when he consolidated, but he must certify that he worked for a qualifying employer from 2012 to 2016. The Department of Education will then update his qualifying payment count to include the 48 loans that were made under the FFEL loan payments, plus the 70 payments that were made under the direct loan payments, which will bring him to 118 qualifying payments that will bring him a lot closer to the 120 payments required for forgiveness. Now, one of our last scenarios is going to be Bob. Bob has been a state employee for 15 years and has been making payments towards his student loans the entire time. Bob had FFEL loans and made 60 payments while being on the extended repayment plan before consolidating his loans into a direct consolidation loan program. Post-consolidation, Bob made an additional 80 payments, but still has $25,000 left to repay. Although Bob has made 140 payments overall, but only 80 qualify for Pslf. With traditional Pslf, Bob has the right type of employer, a state agency, but had an ineligible loan type, a FFEL loan, and non-qualifying repayment plan, extended repayment plan. Even though Bob consolidated his loans, only payments post-consolidation count, so he will need to make 40 additional payments to qualify for forgiveness. With PSLF waiver, Bob can receive credit for all previously ineligible payments. Since Bob already consolidated his Psl loans into direct loans, he will need to complete the PSLF application to update his payment count. Since Bob has made 140 payments total, he will receive loan forgiveness for the remaining balance of $25,000 and be issued a refund of the 20 payments he made over 120. Now we're checking back in with Michelle. This was the scenario that Megan went into at the beginning of the presentation. So Michelle made 120 qualifying payments under an income-driven repayment plan and had an eligible employer and had consolidated her loans. Even though she received forgiveness in 2018, Michelle is interested in the PSLF limited waiver and wonders if she can use it to get credit for her original payments made from 2001 to 2008, and then receive a refund for overpayment. Now, with traditional PSLF, Michelle met all of the requirements and she received loan forgiveness. But with the PSLF waivers, since Michelle already received loan forgiveness in 2018, she cannot apply for PSLF again to benefit from the limited waiver. She cannot receive credit for payments made on a loan that has already been forgiven. And remember, in order to have anything forgiven or to receive, even if you believe that you have that you are eligible to get some credit back for payments you have already made, this has to be done, whether it's the PSLF waiver or traditional PSLF, there has to be a remaining balance on the loans, on the qualifying loans, in order for you to receive forgiveness or receive credit for past payments. So now we're reaching the end of this presentation. We're gonna get into some next steps and resources. The first one is going to be PSLF Help Tool. This is gonna be your best friend for all things PSLF, even through the waiver period, just because if you need to complete an additional steps, it'll tell you where to go, what website to go to in order to complete those steps. So this is gonna be for all borrowers who are applying for loan forgiveness, even if it's through the limited waiver period. It'll help you determine if your employer is eligible. It'll also help you determine if you meet the 120 qualifying payments. And the most important thing, it'll give you access to that employer certification form. Keep in mind, just with every federal student aid website, you must have an FSA ID in order to access this website as well. All right, as part of next steps, the first thing is for you to identify the types of loans that you have, whether you have Psl, Perkins, or other federal student loans that do not qualify for PSLF, so that you're able to consolidate those loans, right? So check to see if you have a qualifying employer. That's going to be step 1 in the PSLF Help Tool. If you have a Psl, Perkins, or other federal student loans, you must consolidate into direct loan program by October 31st, 2022. We cannot emphasize that date enough. There is, that it has been the date that has been set. So you want to make sure that you're completing this, especially because it takes a couple of days for consolidation to go through. Create an FSA ID. This is going to be your best friend to go and navigate through all of the federal student aid websites and access any information about you as a student. Apply for PSLF through the PSLF Help Tool. And then lastly, make sure that you are certifying your employment and submitting the application itself. Going through the PSLF Help Tool is not enough. You must print it, give it to your employer, and then make sure that you're submitting that application depending on who your servicer is. Now, some things to expect. All borrowers who are enrolled in PSLF will have their loans transferred to a new servicer, so keep that in mind. Consolidation can take up to 30 days depending on your servicer, so you want to make sure that you're completing this as soon as possible. And then during this process, you may receive an updated payment count. Disregard that until your PSLF application has been processed. After PSL form has been submitted and received, expect approximately 60 to 90 days for processing. It can take longer depending on the application volume that they're receiving, but that is what we've seen, 60 to 90 days for processing. So again, if you're one of those individuals who, let's say in the last 30 days, you've submitted it, be patient. It does take some time for you to receive anything in regards to where it is in the processing step. You will receive an updated payment count once it has been processed. If your PSLF form is approved for forgiveness, you will be notified that the entire remaining balance of your eligible direct loans will be forgiven, forgiven, including all outstanding interest and principal. Now, some frequently asked questions that we've received, and this is also coming from the student aid website. So, are loan amounts forgiven under PSLF considered taxable by the IRS? The answer is no. Student loan amounts forgiven under PSLF are not considered income for tax purposes. What counts as a government employer for the PSLF program? This is going to be any U.S., federal, state, local, or tribal government agency that is going to be considered a government employer for the PSLF program. This includes employers such as the U.S. military, public elementary and secondary schools, public colleges and universities, public child and family service agencies, and special governmental districts. Does my income level determine my eligibility for PSLF? There is no income requirement to qualify for PSLF. This is not a need-based program. However, if your income increases over time while under an income-driven repayment plan and your payment amount may be higher, this will determine whether there is a remaining balance to be forgiven after making 120 qualifying payments. And then lastly, can I be certain that the PSLF program will exist by the time I have made my 120 qualifying payments? The Department of Ed cannot make any guarantees about the future availability of PSLF. The PSLF program was created by Congress, and Congress could change or end the PSLF program at any time. So again, you want to be making sure that you are taking advantage of this waiver period and get those steps done as soon as possible. Now, we do want to thank you for your time. I know there were a ton of questions. I could see it coming in through the chat. But if you have questions on the limited waiver or PSLF, you can contact one of us from our professional development team at isac.pslf@illinois.gov. For questions that are specific to your loans, you want to contact Federal Student Aid, and we have their contact information on here. Now, keep in mind that if you have a question that's specifically to you, it might be better to reach out to Federal Student Aid as they can look into it for you. We do not have access to your student loan information, so we have this information and we're able to ask questions about the information we presented today, but specific cases, Student Aid might be a better friend to you all. Corinne, I see you talking, but I think
okay. There we go. Thank you so much. Everyone, thank you for attending. We are going to take a few minutes to answer questions, but I will say I know some people came a little late. Some people left early. Most of the questions in the chat were actually answered in the presentation, and we will be sending that presentation to you, as well as the slides from today. So just be reassured that that information is coming, and based on the questions that we were responding to, the large majority of them, almost all of them, I believe, were actually answered in the presentation. So I wanted to let you know that. Also, so what I wanted to do was, you can see this is very complex. I think the studentaid.gov is like your go-to site, for those of you that are trying to, that have specific questions, but we will take a couple of questions here. So what I'd like to do is, since we're not taking people off mute, if you have a question that has not been answered here, if you would like to post that in the chat. I'm not going to go back through all of them at the moment. But if you are still here, if you if you were here for most of the webinar, if you have a question, we'll try to answer some of them now. So the first question I see is, and this was mentioned a couple times, do we still have to consolidate loans even if all our loans are direct?
Anna, do you want me to take it or do you?
You can take it.
So with consolidation, you as a borrower have the option to consolidate for any reason, right? If you think, but with consolidation, you want to understand that things happen with when you consolidate. So for example, when you consolidate, you lose access to some of those potential lower interest rates. If you have direct loans already through the Department of Education and you are looking to benefit from this limited waiver period, no, you do not technically need to consolidate, okay, for the limited waiver because you already have direct loans. If you have Psl or if you have Perkins loans, okay, that's where consolidation really comes into play because Psl and Perkins loans do not qualify for PSLF. So, but under the limit waiver, you still need to consolidate them. And so that way they can become eligible. Now, if you do have direct loans and you choose to consolidate, what's actually going to happen is that if you have difference in payment counts and you consolidate your direct loans, your payment counts all will match. Okay. So for example, if you have a higher payment count on this number of direct loans, and you have a lower payment count on this direct loan, and you decide to consolidate them all together into one direct consolidation loan, your payment count will now move up to the highest level count that you have. I posted in the chat the PSLF direct link, the way to a Q&A to the waiver information, and that's on there. That even if you already have direct loans and choose to consolidate, and your payment counts will now match to that highest number of payment amount. Okay, so, but no, you don't have to consolidate if you already have direct loans, but if you have Psl or Perkins loans, or some of those other federal student loans, you have to consolidate them by October 31st. I hope that made sense.
Now I do see that the second question following that question is to clarify, we need to use income-based repayment plan. So the income-driven repayment plan, I believe is what you're saying. So there are two types of payment plans that qualify for as a qualifying payment. The first one is any repayment plan under income-driven repayment plan. And the second one is the standard repayment plan. The only thing with standard repayment plan that you need to keep in mind, the standard repayment plan, it's intended to have borrowers pay off the entire balance of their loan in 10 years. So if you're in the standard repayment plan, then you technically wouldn't have anything to forgive after 10 years. Now with the income-driven repayment plan, there are several, that is like Megan mentioned, that's going to be the umbrella repayment plan. There are several repayment plans, but that is usually what would give you the most benefits if you're in one of those income-driven repayment plan, so that there can be a balance after to be forgiven.
So one question I did see that came through the chat is that what if we previously made multiple full payments a month in an effort to pay the loan off sooner? Okay, and are you following me? Yeah. Does that only count as one qualifying payment for that month? So go ahead.
Go ahead. Can you repeat it?
Yeah. What if I previously made multiple full payments in 1 month? So the person made more than one payment in a month, but they were for a full amount. In an effort to pay the loan off sooner, does that only count as one qualifying payment for that month?
So it can count up to, you can count up to 12, it can count up to 12 qualifying payments in a 1-year period, or before you have to recertify your income in an income-driven repayment plan. So it can count up to 12 of them a month or a year.
Yeah, so with lump sum payments, I know it can be a little hard to dissect a little bit in that regard, but you can make, if it's for a full amount, yes, it can be considered a lump sum payment and you make it at one time. But what Anna is asking about, what is referring is to past payments. So if you made 2 separate payments in the same month for the full amount, that's only considered one payment. It's not considered a lump sum payment. So it's important to keep that distinction between the two. For lump sum payments, as Anna is referencing, to count as up to 12, you have to make it all at one time. You cannot, like if you make 2 full-time payments within the same month, that's considered multiple payments in 1 month, and that's only considered one. Right. So if you had made one payment on February, today's date of April 14th, and you made another one April 25th, that's considered still one payment, but you just paid the loan. You just made an additional payment in that month. So
I did want to raise a question that's come up a couple times today about payments made while in default. Can you address that?
Yeah. So for periods of default do not qualify for PSLF. That's it. Periods of default do not qualify for PSLF, whether it's traditional or under the limited waiver.
And I do see a question. Someone asked that they were trying to get into their master's programs and they were asking about when they should be completing the PSLF. Just as a reminder, you can complete the PSLF process at any time. This is going to be especially helpful to get your payment count if you want to know where you are in the process with your payment count. But keep in mind, for those of you guys who are familiar with deferment while being in school, it's just a process that your federal student loans, they get the payments on that get placed into deferment, meaning you do not have to make payments during this period, and you automatically, as a student, you get put into this program in deferment. So while you're in that period, even if you are making payments, even if you're making payments on the interest of your loans during this period, those payments do not count or qualify for PSLF as a qualifying payment.
Okay, so I know there are more questions, but we are running out of time. Again, we will be sharing the link and the chats. Anna, could you stop sharing your screen for a moment? We will be sharing the recording and the slides and resources, links to student aid, links to ISAC, links to women employed, so that you will have all of this information, because as you've seen, it's very complex and a lot of it is very individualized based on your situation. Let's see. Mary Kay, do you have a slide? Okay. So for those of you that are still here, thank you so much. We have a couple of things we wanted to mention. If you want to get more involved in addressing the student debt crisis and getting involved with women employed or other things like that, I would say a good place to start. There are many different organizations that are working on student debt issues. Student debt crisis is a good place to start. You can sign petitions, send letters to your lawmakers, and share your story. Sharing your story about student debt and the impact that it has had on your life is one of the best ways to move lawmakers and decision makers to make changes and to improve programs, to change programs, or contribute to the movement to cancel student debt. Also wanted to let you know that ISAC is continuing to do sessions like this on PSLF over the next coming weeks, months, I'm not really sure. And that's how I learned about it, so that we could share it with you. So you can visit ISAC if you want to attend another one. If you still have a lot of questions, if you have friends, colleagues, family that you want to pass it on, they can attend these webinar sessions, which are open to the public. Okay, next slide. Also, we encourage you to stay connected with Women Employed. You can sign up to receive our Wheezing, which is our monthly newsletter. We're active on social media, where we often share stories and articles and information about student debt issues that we think are important, so that you can learn about that. And you can donate also to support our work. I also wanted to mention that our annual fundraising lunch event is May 17th. It's called the Working Lunch. It's going to be hybrid, so there's some people in person, but you can also join online, and there will be more information coming soon about that. So with that, I want to thank Megan and Anna for their very useful and thorough and complicated information. Again, we will be sending everything out to you, and good luck. It's complicated, but hopefully this will at least point you in the right direction to get started, if this is something that you can benefit from. Anna and Megan, is there anything else you would like to say?
I think if you have questions, absolutely, email us if you have questions about the limited waiver and through this process. So I'm going to put the email in again here in the chat. It's isac.pslf@illinois.gov. You just spell out Illinois. We welcome your questions, and we will direct you where we can. But but you know, it's still, the Department of Education is still absolutely a great resource to return to as well. So Anna, anything to add?
That would be all. Thank you all so much.
Thank you everyone for attending.